course, it has been a wild ride for crypto as the collapse of FTX unfolds and trickles into the broader cryptocurrency space. Amid the chaos, Binance CEO today announced plans to launch an industry recovery fund. Few details are available to help reduce further cascading negative effects of FTX. For more on what's in store for crypto, and in particular for the publicly traded side of it, let's bring in Oppenheimer Executive Director Owen Lau. Owen, it's good to see you. In particular, you're focusing on Coinbase. We talked earlier about Silvergate, another publicly traded crypto player. And you called in a recent note what happened with FTX really the Lehman Brothers moment when it comes to cryptocurrencies. That said, what is the eventual contagion going to look like?
So first of all, thank you for having me. So yes, we put out a note last week on Coinbase. We reduced the price target for Coinbase because we look at this situation on twofold. Number one, the near-term impact. Number two, the longer-term impact. The near-term impact, we think that would unfortunately reduce the TAM, reduce the market size of the crypto space. But longer term for Coinbase, we think this is an opportunity for larger platform, for more transparent platform that can take market shares from situations like FTX and other opaque platforms. So that's our long-term thesis. But in the near term, we still see some challenge facing the industry because of the contagion risk.
Oh, and during a crypto winter, we typically do see a lot of investment in different projects, networks really trying to ramp up support. And so there is that investment piece that takes place, but rarely have we seen the type of wipeout on a company basis and on a project or even coin basis like we have this crypto winter. What is there for customers, for individuals who want to engage in cryptocurrency? What's to keep them from running away from crypto right now in this winter?
Yeah, I don't disagree that some of the investor confidence, some of the customer confidence has been impaired. And but having said that, we are still optimistic about the long-term future of blockchain and digital assets because I think that would actually trigger the next phase of blockchain adoption, which is focusing more on the utility. So we know we talk a lot about the first utility, it's trading and speculation, but there are actually many other utilities, use cases out there in the payment space, like the blockchain, like the Bitcoin Lightning Network, and also in the lending space. So we have our the 5th Oppenheimer Blockchain Summit on Thursday. We invited many companies that actually apply blockchain as a use case to help reduce costs and drive faster efficiency. And that would, I hope that would regain the confidence from investors and also from regulators and also from customers.
What specifically needs to happen to restore investor confidence? There's a lot of retailer investors that have been trading crypto on various apps for the past year and a half, 2 years, and now they are probably sitting on huge losses.
Yeah. So first of all, I feel very bad for those people who lost money, for investors and also for customers. And I think the number one thing we need to see is just like what you just reported, Binance is setting up a recovery fund, and hopefully these private market solution can reduce the damage driven by FTX. So that's number one. And number two, I think it really takes time for the industry to show more transparency for the investors that, these industry could be stable and they can run a sustainable model. And number three, go back to my earlier point. I hope when the industry can introduce more use cases to the customers, the confidence hopefully can come back.
And of those things, what role does Coinbase have to play? What can it specifically say to investors? So
I think number one, Coinbase, it's a publicly traded company. The financials are public and the financials are audited by a Big Four firm. Number two, we know based on their disclosure, Coinbase, they don't commingle customer funds with corporate assets. They also don't rehypothecate customer assets to take risky bets. I think those are the type of transparency and disclosures the industry needs to do and needs to have. I see some of the exchanges are talking about proof of reserve disclosure. I think that's a first step, but I don't think that's enough. I think there should be more transparency, more disclosures that kind of like mimic a little bit of Coinbase transparent and compliant model. I think that could help the industry to move forward.
One of the interesting points you made in your note is that Coinbase has seen a big uptick in volume in the month of November so far. But you say a lot of that was likely driven by people getting out, right? People doing forced liquidation and panic selling, as you say. What do you think then will be the longer term step down effect after that? What do you think what is volume going to look like on Coinbase over the next few months?
So just like what you said, just like what I said in my note, I expect there will be an uptick in trading volume in November, but I do expect because people are getting out, they don't want to re-engage. Some people get burned. Some people may don't even trust the crypto industry anymore. They may leave permanently. But based on my conversation with many industry participants, if you are in the crypto space, you still want to engage. Very few of them actually want to leave permanently. There may be some, but the effect is more like the people on the sideline right now. It may extend the duration to get into this industry. So that would put some pressure on crypto prices and also trading volume in the near term. So that's my thesis about why we are going to expect a spike in trading volume, but maybe over the next few months, the volume would come down a little bit.
You know, the interesting thing with blockchain, cryptocurrency more broadly, is that we're trying to figure out who to trust in terms of the figureheads in this particular industry. If you look at tech more broadly, if it's cloud or whether it's social media, we know those figureheads and people can decide whether or not they trust them or the product. But who are those figures in crypto that still remain?
It's a very fair question. After FTX, who can you trust, right? You can point me to, Voyager was a public company and you had the situation in Enron and Lehman Brothers and things like that. Can you still trust this public company? What I would say is, yes, we have the larger company, the figurehead right now in this, like other tech company. But if you look at the internet industry 20 years ago, I mean, we didn't have a very large company, a leader in that space. The crypto, Bitcoin is still a 10 years old product or 12 years old product. And it's fair to say that it's still a pretty fragmented market and people are trying to be the leader because of the network effect they may enjoy. So I would say after this event, we will see the leader emerge. And in particular, more regulated platform and more transparent platform will eventually emerge to be the leader. But we will see over the next, 6 to 12 months and how these all things play out.
Yeah, I was going to say how eventually. I guess we'll see. Thanks so much, Owen. Really great to get your perspective on this very important topic for a lot of folks. Owen Lau of Oppenheimer.